Welcome to a special episode of 2-Bit Da Vinci. This is episode 1 of our soon-to-be live show, where we're going to talk about green investments and highlight different companies in the green tech sector and talk about the future that we want to see and the future that we want to invest in. And I'm going to be joined on this show live by my very good friend, Robert Powell, who I had the incredible pleasure of meeting at Fully Charged Live in Austin this year, which feels about 5 years ago, but it was in 2020 in February. And Robert, why don't you introduce yourself a little bit?
No problem. Thanks, Ricky, for the intro. Yeah, I met Ricky at Fully Charged. I've been a longtime subscriber of the show, and I actually built my own electric motorcycle, and I was able to show that to Ricky, and we become best friends ever since. So I'm glad to be friends with him, and I'm glad to come on the show and give some investment advice.
Yeah, give, not just get. But we had a chance to record some video, so we'll put a link to the video of Robert's electric SV motorcycle. It is incredibly cool. It was super awesome. You could join me for my birthday right before the lockdowns and everything in March. Yeah, I had a little birthday shindig, and Robert was able to come down for the weekend and meet the family, and it was wonderful. So this is going to be a lot of fun.
I caught the last flight out of California that night. They locked down the day after that.
Yeah, it was the weekend, and the trip started really fun, and then a couple of days in, we were like, "Oh man,
it got serious quickly."
I know your wife was worried, and anyways, it all worked out, and we just had no idea that we'd be doing feature stuff like this over web calls, but the show must go on, and I'm excited because we talk about investments a lot, Robert and I. We have this little messaging chat group where we talk about all the new companies that are coming up or companies that are doing well, things that we think will prove to be very valuable in the future, especially as electric vehicles become the norm. And we're on the cusp of seeing that. So I kind of see 2020 to 2030, the next 10 years, as kind of a gold rush. There's going to be tons of new investment, everything from the companies that will manufacture cells and batteries, chemistries, even the mining operations. We're going to have huge investments in new electric vehicle startups. Robert is getting his Rivian pretty soon. We've had the awesome pleasure to talk to. Yeah, we need to do a little road trip from Michigan when you pick it up. Hopefully that still works out. But
hopefully,
we had a chance to talk to Lucid Motors. We're talking with Arrival and all these different companies that are super exciting. So this is going to be an incredible 10 years. My prediction, I think, we'll look back at 2020 to 2030, and we'll remember that as the era of the electrification and the next generation, the paradigm shift that we've been waiting for. The age of oil, I think, is ending, and the future is going to be very much electric.
I truly think that, keying off of what you just said is that, we're in the same time as the Industrial Revolution, but it's the electrification revolution, moving from old, soul horses and water power to industrial steam power. We're moving from gas now through to electrification, and I think that really is going to be. I think we're in that 15 to 20 year paradigm shift.
And we don't just talk about this stuff. If you've watched my channel, I'm really passionate about this. We've made a lot of videos talking about how the end of the gas era will happen sooner than you think. In fact, that was my talk at Fully Charged Live. And we mean it. When we talk about this stuff, we really mean it. And I think one of the ways I mean by that is we put our money where our mouths are in terms of where we invest. I don't hold any investments in any oil companies, in any legacy car makers, because I just don't think they're going to play a big role in the future. So we're looking ahead and not behind. So in the interest of looking ahead, I think the first episode, our pilot episode, is going to be about the charging infrastructure. Robert, I know you're very passionate about that. You're the electrical engineer here. And do you want to kick things off and talk about some of the new startups or recently IPO startups that are interesting in the area?
Yeah. So I'm not going to talk about a startup. I'm actually going to take it back, like way back, and I'm actually going to talk about Blink Network. Ticker symbol is BLNK. Full disclosure, I have holdings in them. I have had holdings in them since they went available. Currently, for full disclosure, I have 175 shares, and they were trading at $2.07 when I picked them up. Currently today, they're in aftermarket hours. They're trading at 27.19. If you take a look here on my screen, you'll see, the year-to-date growth as you're going to see on a lot of the EV markets. I mean, we've got this massive growth that came in the end of this year, and that was partially driven by the S&P 500. There was a lot of speculation, and there was a lot of drive towards building EV companies and just generally companies in general, and it's given the market this great boost to get through what they have. If you actually run back, all the way back to 2012 or even 2016. In fact, this is round about here is where I picked mine up. So end of 2015 is where I picked mine up. And
wow! So you were an early investor.
I was a very early investor. I keep kicking myself that I didn't pick up more, but that's just like everything else. It's I wish I'd picked up more when it was smaller. But you look at the delta between there to where it is now. That's a 200% rise over 5 years, and that's nothing to take a skim at. It's definitely worth keeping an eye on. I think this one is going to be a strong contender in the next 3 to 6 months, I would say. I wouldn't be surprised if it actually crushes through the $50 mark within the next 6 months, just because of the way that the infrastructures are building up, especially, and we're going to touch on this a little bit later, but the Electrify America incident with Volkswagen, the fact that Dieselgate happened with the legacy dealerships. Now, full disclosure, I do have stock in Volkswagen, unlike Ricky, but I do have stock in them for a good reason. The whole Dieselgate incident really gave Volkswagen that supercharged push to actually help their electrification program. And with the outcome of that was the Electrify America program that they had with its super speedy charging networks.
So really quickly, before we talk more about the upcoming companies we want to talk about, I realized I didn't mention one thing from the beginning, which is this is for entertainment only. Like, we're not giving financial advice. We're not your financial investor. So everything that you watch here should be about getting interested or excited to go look and do your own research. This show is for entertainment only. So don't tell us you lost or gained money. That's really up to you. Well, if you want to shoot us a message and tell us you gained money, I'm okay with that. But this is entertainment only. And the reason I mention that is because I want to talk about one thing, Robert, if you'll permit me, before we carry on with the show. And this is something that I'm going to harken back to often. And that is, this is a gold rush. We have a new paradigm shift, which means we have new companies that are starting up. Robert, name a new gas car company that was starting up 20 years ago. Go. there were like because nobody was entering that market. But here we are now. There's a new one. There's tons of new excitement. There's a company, Aptera.
I can name 5 EVs that have started in the last year just by myself. So 2 of them, in fact 3 of them, I have holdings in. So
yeah, and I mentioned Aptera is here in San Diego. They had tried. They were a little early. Battery prices were a little bit high. Density wasn't quite there. 10, 12 years later, it's kind of been picked up again, and they're working on it again. And it is a really compelling car. I'm really excited about it. I'll have future episodes about it. But that's kind of where we are. So I mention all of this because that's great for investment. There's tons of excitement. There's a sense of, I don't want to miss out on this, and people will invest. So you're going to have ups and downs. So first and foremost, you have to have a little bit of an iron stomach, because these stock can go up 20% and down 10% because it's all speculative a little bit. People are thinking what it might be in the future. So if you're I want 7-8% year over year, then just like an ETF fund and get a good ticker that tracks like the S&P 500 and keep it safe. Well, this is much more.
To that point, I mean, today is a perfect example of that. Today, I've got holdings in Tesla, Blink, and XPET, all ones that we will discuss at length. Combined, I lost over $1,900 today. Yesterday, I gained $1,900. So it's you win some days, you lose some days. It's the luck of the market.
Yeah, it really is. And the other thing I would, again, this is my personal advice, would be, let's say you have $100. My personal opinion is take 80 of that and invest it very conservatively. Do something like an ETF, a mutual fund, something where you don't have to actively manage it and it's kind of taken care of. Then the 20%, maybe you're more aggressive and you're okay if it goes down a little bit because maybe you're younger, maybe your time horizon is 20 or 30 years away, maybe it's 10 or 15. But the point is, don't go betting the farm every day, because we can't know everything. Even with these companies, if you follow their books or the news and you kind of dig into the numbers, there's companies that commit fraud. And so even if you were to be a really good investor and look at all the numbers, they could be lying about it, right? Which has happened in the past. So my point is, just be careful and take care of yourself and your family, and make sure that you bet and you invest what you are willing to invest and you can afford to lose, right? And that ties into the final part, and I'll end it here. And that is, there's going to be companies that are going to try to capitalize on this excitement. I liken this to Bitcoin in 2017. Bitcoin I still maintain it's a great investment, but it had a huge spike and there was all this fear of missing out. There are people who had no idea what it was. I was just buying it because their friends told them to. And so the price rode up, and then it kind of corrected, but it is back to where it was now, around 18,000 a coin. But Bitcoin is the real deal. It's like the gold standard of coins. And suddenly there were a million other coins, and they were all trying to vie for that spotlight. And some of them deserved it, others did not. Like BitConnect was a total scam, it was a pyramid scheme. But they took and they fleeced a lot of people out of their hard-earned money. So my point here is, the excitement should be really high. I'm super excited. I really genuinely believe the next 10 years we will all remember, like, for the rest of our lives in terms of like investment opportunity. And two, you should also be skeptical, and you should do your homework and your due diligence and make sure that you take all that into account. So my ask of everybody watching is, entertainment only, keep all those kinds of things in mind, because there's a lot to be excited about. And Robert and I are going to cover various companies in the coming weeks. So if that all sounds good to you, hit that subscribe button, hit the like button, share this video with people who might also enjoy it, and let's get on with the show. What's the next one?
So the next one is one that I'm really happy about, actually. So it's Chargepoint, and Chargepoint is one of those companies that they went really unheard of for a long while. And then all of a sudden they've just got this massive explosion, and I'm really glad to see that they've got the explosion power that they need. And then they've partnered with the SBE, which is Switchback Energy, and they're going to be making some headway here soon. Interesting way that they did it, though, and this has been a topic that's come up a lot this year, especially with the pandemic. And the younger generation, they don't want to do a traditional IPO launch. They want to do something called a SPAC or a reverse SPAC, which a SPAC is basically, it's a special purpose acquisition company, and it's commonly called a blank check company, where there's a bunch of investors that go in. They basically write blank checks to a shell company with a manager that is going to go out and find the perfect person to invest that money in. I think they've definitely hit the nail on the head with Chargepoint, and I think that Chargepoint's going to definitely start soaring after this one. Whereas Ricky says don't bet the farm, I would bet the farm on these guys crossing over the $200 mark within the next 6 months. I think they're going to take off. Word on the official street is that the filing goes live on December the 15th of 2020. So that's only 6 days from now. We don't know what the ticker is going to be when it comes out. The ticker as it stands right now is SBE, Switchback Energy. They do have warrants available for them at significantly lower prices. And I think warrants is probably another episode that we'll cover in the future. Again, full disclosure, I have holdings in these guys. I also have warrants in the excess of about 300 or so for Switchback.
Yeah, so I'm glad you mentioned the SPAC, which is, it's not a new thing. They've been around for a while, but if you were to look back in time, they were very uncommon. The amount of revenue being raised and the amount of capital from SPACs was pretty small. And in fact, like the amount of companies going IPO via SPAC in the last year in 2020 has surpassed like the total amount for the last 3 years combined. So nothing new, but this is kind of proving to be a very popular way that people are choosing to take their companies public. So traditional IPO requires a lot more time, a lot more scrutiny, and it's a really intense and very valuable process. Companies that go IPO the conventional route, there's a lot that goes into it, and you have a certain level of assurance knowing that it has passed all these checks with all the regulators and everything else.
And I think you hit the nail right on the head there, Ricky, is the fact that, IPOs are very stringent. They're very well defined. They're regulatory. They're overall confined. Whereas a SPAC is kind of, it's a shell game almost. And they're trying to get, through the regulatory commissions without getting through the regulatory commissions. So it is significantly dangerous to go with a SPAC, but the payoff can be just as great. So,
yeah, and here part of why they are very popular now is there are certain companies that have a moment in the sun. Like, for example, if you're building an electric vehicle and you know that you need that money to build a factory, which is why people fundraise. That's why people go public, is for added capital to be able to do things like build a factory. And so if you know you're going to do that, sometimes it can be very time sensitive. Perhaps the time it would take to go public might be 2 or 3 years, 2 years, and maybe that amount of time might push you out of the market and you might miss that window. So there's a certain level of time sensitivity to some of these companies. For example, if you're a company that makes like a solid state battery, QuantumScape recently went public. I missed that one. They have gone up, like they've just run up to a level where I think their value is pretty much at a peak for a while. I probably wouldn't invest at this point in QuantumScape, but I missed that one. I was just busy and I didn't really notice because that was a company I was very interested in. But a company like that has a product that the value of it really can be hitting that first mover advantage. And that's really one of those reasons why people tend to go the SPAC route. So again, it shouldn't necessarily mean anything bad. I had a commenter mention that Nikola went SPAC and therefore he doesn't trust it. And it's the same problem that we keep getting into, which is Tesla, great. Okay, now there's all these new EV companies, but there was one bad actor and now they're not good. We should invest. So I think that the reality is much more nuanced. You have to do your numbers and you have to do your analysis and your homework company by company. Don't cast a wide net and just generalize over everyone. So a SPAC can be a great way to go. There's no reason why a SPAC way into the market there's nothing wrong with that. There could be issues with it, just like anything else. But not every company that went IPO the conventional route also worked out. So sometimes when you're investing in the future, there's risk involved.
Yeah, I mean, there's been some really good SPACs that have come out. There was a iOS game that came out that went SPAC, and they nailed it out of the park. I mean, they went for nothing. I'm blanking on the ticker item for it right now. Another one that's just coming out soon here is DraftKings. They're going the SPAC route, and I think they're going to do very well for themselves. Onto Chargepoint though. I mean, Chargepoint's got a lot of good investors behind them before the SPAC. They had Daimler Chrysler, they had BMW, they had Siemens Energy. They also had a lot of institutional investors that were backed into them. There was a lot of schools. UC San Diego, I believe, was one of them. Berkeley was one of them. Bunch of others that I'm drawing a blank on here. Were primary funders basically to try and get them up. But they've also got the fact that they're doing they've got a lot of outreach. They've got a lot of community outreach to the fact that they've gone out to the libraries. They've gone out to the port of Stockton in California, there where you are, Ricky. They actually partnered with the port to bring two massive industrial container movers, install the whole entire charging infrastructure there at probably a significant premium, and were able to electrify the port to have no issues. They've also here's the one I was looking for. So this is directly, off their investor portfolio. You can see Disney, Hyatt, Target, Whole Foods. You go to any of these places, and I guarantee that you go to at least one of these a day, if not more. Of course, pre-COVID, and then after COVID, I'm sure we'll go back to them again. But a lot of schools, a lot of cities are all part of this list, and that's definitely going to help grow the mindset of I have an electric vehicle, I need a charger. Oh, I went to school and they had Chargepoint there, or I went to campus there and they had chargers there, or I go to Whole Foods, they got chargers there. So knowing that your day-to-day plan is fully covered with chargers at some of these locations is really a good thing. And I think they've got the mindset driving towards that. Now, I will harp on Ricky for just a little bit. So he did mention, that he doesn't have any holdings in any of these old legacy oil companies. And I'm of the other way. I think that these older legacy oil companies, I think, have something to show us in the electrification phase, because they've done the hard work already. They've gone out, they've put the structures in place, they put the infrastructure, they put the hardware, and they've got the routes and the technology and everything set up that, when the true electrification does come, that they can very easily change those gas pumps to charger pumps. And you've got an instant infrastructure overhaul that I think is going to be really great.
I will challenge you on that, though. That does make sense. I'm with you on that. You think, okay, there's a gas station today. There's no reason why we couldn't retrofit that to become the electric vehicle charger of tomorrow. But I would challenge that a little bit and say, with EVs, you should just really charge wherever you park. There's no reason why there can't be charging. Like, for example, when you pay at a parking meter, there could be a charge point at every parking meter. And now your parking cost and your charging costs are bundled together, and you get a bill that says, thank you very much. Your parking for the day was $2 and your charging was $8 and you pay $10. So I don't think you need to devote.
They do that.
What's that?
In the UK, they actually do that. There's a bunch of they're called city chargers, and they're literally it's a charge post. It's a post that you put your meter in to pay your toll for that parking spot, and there's a plug right underneath it. In the EU, it's different than it is here in the States, in the fact that most people in the EU actually carry a cord, a double-ended cord, and so you actually just pull your cord out, you plug it into the charger, and you plug it into your car, and you're done and you're ready to go. So in the EU, they're already there. I think it's going to take a little bit of time for the US to catch up with that, but I wouldn't be surprised if that starts coming here soon as well.
Yeah, I think I would challenge the entire notion of having to drive. Let me go drive over here and charge my car. I think charging happens wherever you go. So you either charge at home if you have a garage or parking where you live. If you don't, you would charge when you run your errand. You go to the grocery store, you go to the movies or the mall. One day I think we'll have that kind of stuff again. And you would charge while you're taking care of that errand. So to me, the idea of we can use the old gas stations, I think I'd rather see all those old gas stations turned into like little parks where kids could run around and play while we take a break for something. Um, I think we charge in place, wherever that might be, parking lot, parking structure. And if you remember, Robert, there was a company at Fully Charged Live that had the wireless inductive charging in the ground. Do you remember that?
Yes, I do. And I've
So
actually been in talks with them about getting one here at the house for
the Rivian?
my electric motorcycle. Well,
Oh,
my
okay.
Rivian and my electric motorcycle.
So my first thought with that is, oh, there's going to be a lot of losses. When you have inductive charging, the efficiencies aren't very good. But they mentioned that they were getting about 94% efficiency. And I think that is killer.
Yeah.
I have forgotten to, I'm not going to lie, I've forgotten to charge my car, I think 3 times now in a year. One of them was really unfortunate because it was before a long road trip. So we had to like start a road trip and go straight to charging like within about 50 miles or so. So horribly, inconvenient. But imagine if you had just inductive charging, you roll into a parking spot. Imagine if you go into a parking lot at a store and you just walk away and you get a little alert on your phone that says charge now. And you go, no, I'm okay. I'll charge at home. Or yeah. And you hit one button, you have your account is all linked and your car is charging as you're parked. I think the idea of a station, I just don't think we'll need that, to be honest with you.
Yeah, no,
Your
I
point is
agree.
understood. I think in the middle period, the middle transitionary period before we're fully electric, that will be what happens probably.
Yeah, and I'm with you. I agree that I think having a parking lot of inductive chargers there available, and I'm sure that Chargepoint and Blink are probably on that path as well, to have that's kind of infrastructure in place. And I don't think it'll be too long before we actually see that coming along.
Yeah. So next thing I want to talk about is how fast you're charging. A lot of these companies that started out, like you mentioned Blink, which has been around for a long time. I used Blink about a week ago when I went to the zoo. I plugged in and I charged. I thought it was really cool that they had solar panels on top. So I was charging by the sun, which is just a cool thought. But my problem was it was a level 2 charger, which means that for my 75 kilowatt hour battery pack Tesla Model 3, I plugged it in and I had about 100 miles of range remaining. And I went to the zoo and I came back and I had I had gained 100 miles, 200 miles. And that was over 4 or 5 hours. And that's just not fast enough. If I really needed charge for a trip, 4 hours, and that wasn't enough, I just don't think that will be sufficient. So my point here is, and tell me what you think, we are getting into an age where we have really long range electric vehicles. My car goes about 300 miles. Your Rivian, maybe even more than that. And you have a 180 kilowatt hour battery pack when you get it. That is going to take a lot of juice to charge up. And how valuable will it be to say that we have 1,000 level 2 locations?
So
I think it's better than
here's my
nothing,
thought
but
on that.
don't you think we need DC fast charging?
Well, so DC fast charging is nice for getting a full battery charge pack. These level 2 chargers are more for when you're out at the grocery store and you're just popping in for a little bit. It's to get you that that 15 miles of range that you drove to the grocery store back in the tank. I think that's what you're going to see the infrastructure changing to is level 2s are basically supplemental charging. I don't think they're full chargers. I think they're supplemental chargers, and I think that's where the industry is going. I mean, don't get me wrong, DC fast chargers are amazing, and especially for my Rivian with its 180 kilowatt pack, or even yours with you got a 90, right?
75.
75, yeah. So I mean yeah, you're good for a smaller charge, but I think that you're going to see that for road trips, you're going to see like on the main corridors, like Electrify America has done, Chargepoint has done. You're going to see, AC fast chargers, to handle that long distance haul. And then in the city, I think you're going to see the level 2 chargers there to actually supplement the around town driving. So.
Yeah, there's going to be, you either have charging everywhere. If I could, anywhere I go to the bank, I go to the mall, I go here, I go there, and there's charging and I'm plugging in. But that would be kind of annoying, right? If you're running a 2, 3, 10, 20-minute errand and you're constantly plugging in and out and stuff, I think it'd be, the
Yeah,
inductive
but
would be the future. I think that's the way we have to
you've
go
got a
eventually.
400-mile range, and you're driving in, you're doing your 15 miles. You're going to be there for, like, we'll use my wife for example. You know, she runs to Target. I don't know any woman that runs into Target for less than at least an hour and a half. So she plugs the car in, she runs in there, she plugs, she gets a charge for an hour and a half. She's recouped the miles that she's used to go to Target.
I get that.
And then coming home. So,
but what if you don't have charging at Target, and then you have to go run errand number 2? So my point is, if we have them everywhere, that's one thing. Otherwise, if they're not everywhere, they have to be fast charging, because then you run 4 errands and then your 5th stop, you have charging and you plug it in and you charge it all up again. So I think there's just little things like that we have to work out. But again, this is why this is exciting, right? Because it's a little bit of the Wild West. And to your point, Chargepoint has a massive network. And I will give them credit. Their DC fast charging network is growing at a pretty good rate, because I've checked on it over the last couple months and stuff, and there are new ones coming online. Most of their network is level 2, which is, fast AC charging, but it's not quite that Tesla supercharger level where you're getting 50, 100, 200 kilowatts at a time. So that will come, exactly. I think, in time. But one thing I would tell anybody watching is, if you are thinking about investing in the charge infrastructure companies, check out their map and try to break out fast charging, because fast charging is going to really matter. All the cars that I think are slated for the release in the next 5 years are going to be 100 kilowatt hour batteries plus. So that's going to matter. So you don't want to be stuck having to charge for a long time. So just a little thing I would keep in mind. All right, what's next, Robert?
So I want to touch on the big giant in the room, and that's, I mean, you've touched on it already, but that would be Mr. Tesla himself, Mr. Elon Musk. I don't think I need to initiate the ticker for this one, but the ticker is TSLA. Currently trading in excess of 600. 604, I think, is where they're at today. They've got some interesting come ups. They've definitely had their ups. They've had their downs. Giga Berlin is coming online next year, I believe it is. The factory here in Austin is coming on within the next 2 years, I believe it is. We got the Cybertruck, which you have a reservation for that, don't you?
Oh yeah, can't wait. But I have a feeling it'll be a while, because I wasn't one of the early people, and I think I've heard there's delays. But yeah, I can't wait to get one eventually.
See, Rivian.
I'll just borrow yours. How about that?
Okay, just drive on down to Texas and come borrow it from me. How about that? But yeah, I think that Tesla's definitely got a name in the game. They've got their charging infrastructure, on point. They did it the right way. They went out and they built the infrastructure proprietary to them. Even though his patents are open sourced and they're available to anyone to get, it's still pretty much a closed network to actually use any of the chargers. And there's some nice. You've done a couple of long-term road trips, haven't you, Ricky, in your Tesla?
Yeah, incredible. The time it takes us to have lunch, for example, we charge the car. And I've driven to my mom and dad's house, which is about 450, 500 miles away. And we normally need 2 stops to charge because we drive quite fast on the 5. And yeah, have lunch, and within 30 minutes or so, your car's charged. So that fast charging really, I think, is key. You're not doing road trips on level 2. Just put it that way.
No, definitely not.
the Tesla network is really great. The question I have going forward, and by the way, talking about investing in companies, Tesla is the Bitcoin of EV companies. They are the gold standard.
Yeah,
everybody is chasing them, right? They're the ones that, if you're a new company, you go, look, we're going to be like Tesla. Look what they're doing. Like, you're kind of taking some of the value from Tesla, just like every other coin did when Bitcoin was going crazy. But that being said,
Yeah, and
Tesla is a
I mean,
charging company. They're an EV maker. They're a battery maker. They're kind of doing everything. They make stationary storage, energy storage. They make solar panel roofs for for the best looking solar glass roof tiles. They do a little bit of everything. And in terms of their charging infrastructure, the supercharger network is proprietary. It's not for everybody. It's just for Tesla owners, which makes it interesting. In LA, I've seen a lot of people in LA tweet that they're waiting in long lines to get into the superchargers because as many as they're building in LA, there are tons of Teslas. I think there are more Teslas in LA than anywhere in the world, including the Bay Area. So for that reason, it's always kind of a chicken or the egg game where do we build more chargers or do we have to sell more cars? And it actually, I think, will require them to scale that network up as they sell more cars, which is unfortunate. Like no one says to GM, "Hey, go build gas stations for every thousandth car you make." That way they have a place to go. Somebody else handles all that for them. So I think for Tesla, what will be interesting is do they license to other companies? For example, I was reading that Aptera, that one of the new companies, is in talks with Tesla to potentially license their charging infrastructure, which is kind of cool. And I think for Tesla, they say the Aptera offering doesn't compete with anything we're doing. Like no one goes, I'm either buying a Model 3 or this Aptera crazy teardrop shaped, really efficient car. So for that reason, Tesla might let people into the network. But if they do, that means longer waiting times for their Tesla owners, right? So I don't know. And I think until there are better DC fast charging options for Tesla owners to go to, this will be a weird push and pull situation. What do you think?
I think it's definitely going to be interesting. Touching on Aptera and their setup. I think everyone was speculating because when their early video came out, they had a Tesla charger on the back, and everyone all of a sudden jumped on it, saying, I think it's going to start using the Tesla charging network. I think everyone cottoned on to the fact that they may be in talks. It'd be interesting to see and get some more clarification on that one. But it definitely would be interesting. The thing is, though, to that point as well, the Activa's definitely got a small battery pack. It's not as big as even the 75 or even the 65s. So I think for them to charge up is going to be nice quick charges and they're out. I don't. There'll be some detriment to the lines, in Los Angeles, to the chargers, but I don't think that there'll be much more for it.
And it also will require time, and it's not going to be a high volume for a while. So that's the other thing too. If they were to partner with like Volkswagen, who could potentially build like 1 million ID3s and 4s in the next 2 years, that's a problem because all those cars have to charge somewhere. So I think it's a question of, do they compete with us? Which means, oh, the ID3 can charge in the same network as the Model 3. Now you're in direct competition, which wouldn't make sense, I don't think. Why would you build this network and do all the legwork and spend all that CapEx to not then have that exclusive for the people who buy your car? Yeah.
I mean, you could do it the way that Electrify America does it. I mean, you've got, if you're an Electrify America member, you get a slightly discounted rate on your charging, versus if you are not a member, you pay a little higher of a price. So you get that price break. So Tesla may end up doing something like that, where Tesla owners are grandfathered into this premium club, and the Activa owners are at a different tier, or the Volkswagens are at a different tier, something like that, where non-Tesla owners are at a different tier. So
that's a very good point. Yeah, they could probably do something like that. Here, I have a question for you. To me, one of the cool things about the charging infrastructure companies is it doesn't really require like shipment of gasoline and underground storage vessels and all this complicated stuff. You've got electricity and you offer it. Like, it seems pretty straightforward. Yet, in my experience, very often they are like out of commission. Chargers are not working. They're like, in need of maintenance. So why is
so? The point to that is, they don't need a whole entire infrastructure system, but they still need TLC. They still need care. And a lot of people just, you're used to a gas station pump. It's metal. if you bang into it with the pump, that's not a big deal. These chargers are a little bit more sensitive, in my opinion, and I think that's part of it. Also, you've got, while you may not have the tanks and you may not have the plumbing and the other accoutrements that go with it, you do have the big the big inverters to come in to bring mains power in. You do have, in the case of Tesla, you've got some that have solar panels on the top of the roofs for the shades. You do have the difference between the level 3s and the superchargers, even the supercharger V2s, and all the different sets that go with it. So, and also a lot of the Tesla's charging stations now actually have batteries as well, because they've got the power walls built in. So you've got all that additional infrastructure. Yes, it's just pieces of copper wire, but it's still additional infrastructure that they need to maintain.
So do you see the charge infrastructure companies of today? Do you see that as kind of like the oil companies or the oil gas station companies of a long time ago? Do you find it to be a very lucrative proposition? And do you think the companies that we're talking about have a really good, bright future in the next 5 or 10 years?
Oh, I definitely do, and I think that I still think that we're going to see the oil companies. We're still going to see the Shells. We're still going to see the Gulf oil, the 76 oil, Exxon's, the Mobiles, HEB oil if you're here in Texas. Any of the other corner grocery stores, the 7-Eleven grocery stores. I think you're going to see them start to supplement or even change over as an interim between the gas to electrification phase to get it going.
Yeah, I think that's why we wanted to make this our episode 1. If you're going to buy electric vehicles, what you're really doing is saying that we need places to charge them. Just like I've always said, buying a gasoline car is like buying a contract with ExxonMobil, that you're going to be a customer for life. What other recourse do you have? You have to use their product for the rest of your life.
Yeah, exactly.
You buy the car one time. You're never going to give, the loan or whatever. But once the car is paid off, that's it. But you are going to be going back over and over again. So in the electric world, you have more control and more options. You can charge it at home always. If you're on road trips, you might have to charge it out and about. But this is going to be what gas stations used to be. So again, we're on the precipice. We're on the very beginning of all of this happening. A couple of things we should probably mention. You kind of hit it on the head. Electrify America was kind of the silver lining from all the Volkswagen tomfoolery that caught with their pants down with.
The whole entire ordeal with that, that really did a great thing. If you look here, you can see Volkswagen itself. It's not a pretty penny to trade stock in. It's $19, compared to the Tesla at $600, or the XPeng or any of those.
What's their market cap?
Their market cap is 78 billion euros. So whatever that works out to be in American dollars.
Yeah.
It's definitely, they're not lagging at any point. But a $19 stock, which really, if you look at it over the past 5, it really hasn't changed that much. Go back to 2016, we're at $13 a share. We peaked out at $22 a share. During the start of the pandemic, of course, we crashed out to 10. But it's pretty much stayed within that 17 to 19 barrier for the last 5 years. If you look here, Tesla over the last 5 years has gone from $40 to $600. This is on the post split correction. So at one point they did cross over 1,000 on the pre-split. So they've got the market cap to beat it. A $572 billion market cap, and they're trading where they should be. I think they're a little undervalued. I would see before the next 3 to 6 months, I would see them crossing over the $1,000 threshold again,
Wow,
and
big.
coming
That's a
back
bold
into
claim.
evaluations.
That would
Well,
put him near
so
$1 trillion, by the way.
I'll back it up because when we had the stock split, I said to you that within 3 to 6 months we would be back at 500, and we were back at 500 within quite a short term. So I mean
Yeah.
I think they're undervalued, and I think they're definitely right for moving on to the future. So
Yeah. Yeah. So we'll talk more about them, Tesla. Don't you worry about
yeah,
that. We'll have an episode
I,
about them. But
I was going to say, I think we need to have a whole entire episode
yeah,
dedicated to Tesla stock and their coming product line.
and we'll talk about them in every episode. Again, they are the standard bearer, and they deserve mention every episode. But yeah, we will talk about it. But what I was getting at was with Electrify America, you're not going to be investing in them directly. They're not like an startup company. Instead, if you wanted to, you would be buying shares of Volkswagen, however you feel about that. And that might be a turnoff for some people. Or maybe you think that their future is bright because of all the OEMs, the old legacy makers. I think VW does have the right stuff. And I think they've been making the right investments and the right decisions, maybe because of a bad reason a couple of years ago, but I think they are making some good choices now. So if you wanted to
So
invest in them,
I'll add to that
Volkswagen.
just for a second, Ricky, because right now they're trading under Volkswagen. I would say that there's probably room for an IPO on Electrified America, and I would say that that's probably going to happen. I think Volkswagen's going to see the light, and I think they're going to run the IPO, and they're going to go through a proper IPO channel, not a SPAC. They're going to go through a proper IPO channel, and
They'll break off the business and make it its own thing.
I think it would be very wise of them to do that, because I think you're going to see the trading authorities come in and say, listen, you can't have this grandiose charging network and
Tesla
also
does.
have well, Tesla was different. Tesla went about it differently. These guys created the charging network out of a huge problem, and they said, oh, by the way, by 2035 we're going to go to all electric. I think more and more they're going to see that that needs to be spun off, and I think the same with Tesla. I think the trading authorities are going to see that Tesla's supercharger network needs to be spun off into its own thing. Tesla's really good about keeping everything in house right now, but I have a feeling that they're going to start to spin things off and see different venues come out.
That's an interesting take. I think I disagree with that, just in general, but that's an interesting opinion. I think time will tell on some of that kind of stuff. The good news is, even though Tesla has a really big network, there's tons of other networks, and so it's not like they have a monopoly or anything in terms of. And even if you have a Tesla, you don't have to charge at a Tesla station. You can charge it at anywhere you want. I used Blink the other day. I've used Chargepoint, EVgo. So there's some other ones out there. And one other honorable mention, as we're running about an hour, which I'd like to keep the show at about an hour, but one other honorable mention is Ionity, which is a big network in Europe. Robert he's in the States now, he's in Texas, but he used to be from the UK. And Ionity is a big player there. Also not really easy to invest in, unfortunately. But if that changes or anything happens, we'll cover it.
Yeah, and I will say that while we've talked about Chargepoint and we talked about Blink and Electrify America, I mean those are and EVgo as well here in they're in the States, but more predominantly in Houston because of NRG energy, and then also in California. I think that's not the only ones that are out there. There's definitely significantly more out there. ABB, for example, has a bunch of chargers. BP actually put a massive bunch. They helped fund a company called PowerShare in China, which is basically it's a charging infrastructure network over there. In the UK, BP, of course, British Petroleum. That's the big claim to fame. They got ChargeMaster in the UK. And they gave them a subsidy of £130 million last year to go through and install almost 7,000 chargers. So I think that to my earlier point, I think that they're definitely moving in that general direction, and I think that it's going to be well worth it in the future.
Yeah, exactly. So is there anything else we should talk about here? I hope this was a good round idea of what we're going to be about. I think what we should do is, if you want to maybe join a chat with us and like talk about investing and stuff, we'll probably offer a Patreon level where you can join and become a patron and be in like a Discord group with us where we can all chat, Robert. Especially because I can guarantee you there's some really smart people in that audience who we could all benefit from, and that's really kind of the idea.
Yeah, I can already hear the keyboard, starting to smash away with the commenters agreeing or disagreeing with some of our
which,
tickets.
By the way, is why this will make for a fun live show. I think what we'll try to do is we'll keep the show around 30 minutes or so, and make sure, depending on how many people are tuning in and how many questions there are, but make sure we leave enough time to talk about stuff from the audience and the comments as well. So I think the format is going to be, we're going to go live. We will announce exactly what day shortly, but it'll probably be around 5:30 Pacific, 8:30 Eastern time. And it'll be a live show, and we'll talk about all the things that are happening in the world of green, sustainable investing, which to me is just super exciting. And if we can talk about it on the show, all the better, right?
Yeah. I think that this is going to be good. I think that there's definitely some people that are going to get some good interest out of it. And again, we're only financial advisors on TV, so don't take what we say as gospel.
Yeah, exactly, guys. As I mentioned throughout this entire hour, there's a lot that goes into it, and make sure that you're comfortable with investing overall. And if you're like us and you have that excitement because maybe you're not an engineer at Tesla building the next car, maybe you're not at LG making the next battery, but what we can all do is we can invest in the things that we believe in. I've always been a kind of a fundamentals investor, but I also invest in the companies that I like their values or what they do or how they do it. And so to me, that's always been an important part of it. And what better way to invest than to invest in the future, especially because I think it's going to be pretty profitable. And even if a couple of your investments don't pan out, overall, as long as you diversify the kinds of investments you're making, I think it's going to be a very profitable and very lucrative next 10 years. And that is why we're starting this show today.
Yeah, and I'm looking forward to it. I think we're going to have some great discussions about it, and get some good investment advice. And I'm always open for new investment advice. So if you've got a ticker that you want to, if you want us to talk about, or if you want us to research, or you've heard a rumor on the street, drop it in the comments section. Let's take a look at it and see if we can maybe make some decisions out of it.